Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, on Friday, the Australian dollar descent continued and eventually found support just above the 69-cent handle. However, there is still a key support level seen around 68.45.55. In light of the pattern, I still feel there is potential for this market to rebound. And as long as we maintain above that 68.5 level, then I'm looking back towards a potential target that's seen roughly around 70.5 and reassess from there. The dollar index, which measures the greenback strength against a basket of 6 major currencies, has rebounded and currently holds around 104.40. From the rebound, still potentially the euro is still holding relatively well, considering it did have a slight pullback on Friday. But in light of the pattern, I feel the market may take another challenge to the top side and look towards that 105.45 and maybe on towards 106 as a potential target, and then see profit taking from this level. We did see a brief challenge there, but the market's still holding a relatively strong pattern since the inverted hammer, the key reversal, and this strong candle that followed. And with the RSI close to the midway point, and eventually we might see that break to the upside and expect to see about a 100-point rally before any weakness to emerge. After taking a tumble last week for dollar yen, the market rebounded very aggressively back towards that 135.5 area. In light of the pattern, it's still a little bit indecisive if the market can continue, but I will be keeping an eye on this 135.5 area because a break could actually see further gains. Since the rebound off the low 119 for sterling, the market is still looking potentially to this trend line, which is somewhere around above 124, possibly to around 124.60.80. In light of this pattern here, allowing a little bit of slippage, of course, to the top side as the shadows of the candle tend to sometimes spike. I like the way this MACD is shaping up, and therefore I feel for the start of this week may actually see a little weaker in the US or the greenback and see a further gain in the pound. Sterling Kiwi still whipsawed as it trades in this sideways around the 193.5. But in terms of technicals, I feel the market may actually break down and eventually look towards the region of 192 to potentially that 191 area that was seen as relatively firm support. The market backs away from the top side in gold on Friday, which was around 1,854 to 56. From the backing away, the market is a little bit weaker to the start of this week and therefore could see a further slide if we see a break, that is, of 1,830. Beneath there would give further scope down towards 1,788 to about 92. Finishing up with oil, well, the market plummeted on Friday. We got the confirmation, first of all, from the break of that 115 level. Then the call to the downside was at 107, and that's pretty much where we are now. So the call was at 107.30.50, so I'm now taking the view at this point to neutral and reassess now. As let me just bring this down. So this is where I felt the market could eventually reach, somewhere around 30.50 area. So we're pretty much at its objective since that retreat from the 121 area. So for now, at the start of this week, I'm neutral for oil. Well, that wraps it for the morning. Thank you very much for joining me, but please join me later for the end of the day wrap and also keep an eye out for the intraday report.